delighted today to be speaking to Jimmy Baillie, founder of Silver Oak Capital, here at the Mount Nelson Hotel in Cape Town. Welcome, Jimmy.
Thank you, David. Thank you for having me.
So terrific to talk to you today. We've known each other for many years from your time in London, and now you've set up a new business, which is a UK company, but you're working back and forth from South Africa on it. It'd be great to hear a little bit more about it.
It's certainly been, well, obviously, as you know, Silver Oak Capital has been going for a couple of years in London already, but I think I've as of the beginning of this year, I've relocated down here with my family. We're a small growing family down here, but I think it's just in terms of the quality of life, I think the move down here was definitely the right thing. Obviously, running the business from here would certainly be a challenge, but I would say so far it is working, and so far so good.
So you've got a team in Mayfair in London, and then you kind of commute back and forth on that overnight flight.
Correct, yeah. So I've resigned myself to a bit of traveling every month. I go back, for a few days, and I get some meetings in. I meet who I have to meet, but I would say, I run the business from here now. I have an amazing home office with an incredible view of the ocean. So, I'm certainly not complaining about that part of things. But a bit of traveling, but the time zone, it does work. And especially with the way things have changed now, a lot of people are doing things remotely. So. It's so far so good, so can't complain.
So perhaps tell us a little bit more precisely on what's the focus of Silver Oak Capital.
So as you know, Silver Oak Capital, we're a debt advisory firm. We focus on the large loan space, so that's sort of £2 to £20 million. That's sort of where we like to target in terms of the loans we do. We do
with UK real estate or global?
Mainly UK real estate. We also do a bit outside the UK, France, Spain, Western Europe. We say we also do, but it's mainly the UK. So I'd say about 75% of our business is in the UK.
And what's the outlook for you for UK real estate as we go? I mean, we've got tricky times. There's forecasts of obviously a correction in UK real estate prices, valuations. I mean, what's your feel for the way the market's going to play in the residential space?
Well, I think fortunately for firms like mine, I think it's kind of, you're fortunate, you're in a position where you're kind of recession proof really in terms of the kind of business that we do. Clients are always going to need to refinance. There's always going to be property developers who need new loans. So there's always going to be that market for those loans. So, there's certainly, obviously, the interest rate environment is a different animal now to what it was even a few months ago. And actually for me too, this is a big learning curve for me because I've actually never worked in the UK in a high interest rate environment like it is now. So it's been a lot of learning.
In a cheap money era.
Exactly, So it's been a lot of learning, but certainly a lot of opportunities too. So.
So what sort of options are people looking at within, the real estate debts that they have? So is it, it's unregulated mortgages, I imagine, so it's bigger, more sophisticated, but what are some of the considerations that people look at the deals they've got, refinancing deals? I mean, what are some of the mechanics of the people reviewing their situation?
Well, I'd say there's definitely an interest in fixed rate loans at the moment. So whereas previously a lot of borrowers would be happy, developers and clients who are looking for regular mortgages would be happy with sort of tracking rates because they'd be quite low. The chances of that, the cost of those mortgages going up is relatively low, but now a lot of clients are being hit by rising interest rates, obviously, because they're on tracking mortgages. So, and also tracking other types of not only residential mortgages, your regular senior debt loans and commercial loans are also on tracking rates. So we've had a lot of inquiries for clients who are trying to fix those rates. Obviously, you have to factor in the cost of fixing that versus staying on those tracking rates and taking on that risk of next month it could cost you more, the month after that it could cost you even more. So a lot of inquiries for fixed rates and obviously I think as you mentioned earlier with the there's going to be a correction in the housing. I think as over the course of the next year or two, as regular borrowers start coming up to refinancing their existing mortgages, you're going to see a lot of people are going to have to downsize. It's going to put a lot more supply on the market, so that's going to bring down prices a bit. So yeah, that correction certainly will come, but hopefully it won't be too big.
And you broke these loans with private banks. You'll have a sort of range of contacts. I mean,
yes. So that's essentially what a lot of my day is spent is getting to know these new lenders, new banks, new private debt funds, hedge funds, family offices. That sort of really a lot of the work that I do. So obviously we work with private banks, debt funds, family offices, as I said, specialist debt funds, challenger banks. So I mean, the beauty about the UK market is just hundreds and hundreds and hundreds of lenders in the market.
Do the banks always want AUM?
No. So obviously a lot of the bigger private banks do, but then occasionally you do get. If, for example, we just had a Swiss private bank who contacted us and said they had a tranche of around 150 million. They really needed to get that out, looking at prime London residential mortgages, and they were willing to lend without AUM. So. AUM is often a challenge that we work with, but at the same time, some of these institutions have targets to hit. They need to lend money. So there are, if you know the right people, they're always around that. Yeah.
And the debt funds is more in distressed situations, or just that fit outside the parameters of a private bank, or?
Yeah, I'd say a lot of the, especially a lot of the debt funds we work with are involved in, senior debt for construction loans.
Yeah.
Or short-term loans, bridging loans, or things of that nature. So, but they usually are bigger loans, 15, 20 million plus. So,
and you focus also on the commercial side, so you'll put those bigger ticket deals together. I mean, talk us through how those kind of deals might look.
Absolutely, yeah. So one of the biggest loans we worked on recently is 150 units in South London, which is and we placed that with the London Debt Fund. That's a 60 plus million senior debt loan. So they'll release that in 2 or 3 tranches over the life of over the construction life of the project, and that's a ground up scheme. So we work with a lot of developers like that, but then at the same time there are some property investors and property developers who need short-term lending, bridging loans, things of that nature. So there's. And especially with the bridging market, there's just, you may know, there's just every month there's new lenders coming in, or old lenders leaving the market. It's such a competitive industry right now. So you really do, it takes a lot of time and effort just to keep up to speed with who's in the market and who's lending.
And the rates on bridging can be can be very punchy and high, can't they? But in certain circumstances where people are selling an asset perhaps, or something like that, they're just in a scenario where paying that bridging loan still adds up, even though the monthly cost of that deal is expensive.
Absolutely, no, it's obviously there's compared to a regular loan, for example, a mortgage where you do an affordability assessment and there's a lot of other underwriting that goes into it. Bridging loan is more, it's more about the value of the asset and the story of the exit, really, and how they're going to get their money back. So,
what quality of security? Yeah.
Exactly, yeah. So, there's absolutely, it's easier and quicker to get, I would say, traditionally to get a bridging loan. So, I'd say if developers are looking for short-term funds relatively quickly, you'd probably go for that option. But it's certainly a competitive market, and like you said, the rates can be as high as 1% a month, but at the same time there are some funds who lend at 0.5% a month, and upwards. So there's a real range. It just depends on what the IRRs of that fund is and what they need to achieve.
So the challenge for you then is talking back to that client about, well, look, these are the deals. This is where the market is set, regardless of almost managing their expectations about what they should be paying for this debt, and then just counselling them on whether it's worth it. With a cool head, isn't it?
Yeah, absolutely. Well, I think. Especially when it comes to doing larger loans and you're dealing with clients who really are switched on and they know the market too, you try to, it's less about telling them exactly what to do and how to do it. It's more about sort of educating them on the market and sharing your knowledge on the market and how it is today. So, but I'd say currently, obviously with the interest rates going up, I'd say one of the challenges we find is there's a bit of a gap between where the market is and where the expectations of the client is in terms of what the cost of a loan, you know. So a bit of a challenge in terms of closing that gap, but you know, that's sort of why we're here.
And I mean, how are lenders reacting generally? You know, I mean, what do you see in terms of trends in regulations? Is it harder to get deals away? You know, I mean, obviously it's well signposted where the direction of travel for interest rates, but at the end of the day, banks are going to make money by lending money. So how do you see lenders' like mindset changing?
I'd say I've had some detailed discussions recently with a couple of funds, and you know, overall there is a positive outlook on the UK property market and the residential property market. So they do, you know, the general consensus is in a couple of years things will come around and things will start moving up again. So you know, whilst there is still that desire to lend and the need to put money out the door, and of course, you know, there's a lot of liquidity out there. I would say getting a deal through credit is certainly more challenging. I'd say more questions, more due diligence, more underwriting. So they're a little bit more careful, I would say, before they put the money out.
I mean, how do you see family offices coming into the space? I mean, obviously there's family offices there who are proactively actually trying to make a turn in volatile environments, maybe sat on cash, maybe like real estate as an asset, know the market. They're quite nimble. I mean, do you see that the family office seen as quite active in terms of plugging those gaps that others just don't have the stomach for?
Definitely, yes. I'd say family offices, especially some of the family offices we know, are into the bridging space quite a lot. So, you know, your standard short-term 12 months residential bridging loans, you know, there's a lot of liquidity out there for that segment of the market. So I'd say that's where family offices are probably looking to put their money, but at the same time there is the odd quirky deal that's got a bit of a unique angle to it that maybe some of the traditional you know, bridging lenders wouldn't go for. That the family offices, they've got a bit more of a they've got a bit more risk averse in that regard. So,
and I mean, one thing I've been talking to people who have been interviewing over the last week about is the UK and SA business. I mean, your business isn't focused on a South African client base, but what's your assessment of, you know, business and opportunity and for trade between UK and SA in terms of people investing and just general? What do you feel the general appetite is amongst people you talk to down here?
Well, I would say there's a strong appetite in South Africa for doing business outside of South Africa. There is, you know, people are very positive and enthusiastic about it. They enjoy hearing about, you know, your business from and what you're doing and what line of business you're in. And there is a lot of capital here looking to invest overseas. So. You know, that's why, for example, you know, yourself with the PCD Club, all these financial advisors and other professionals in the financial services industry, it's a great place to come, Cape Town, and there's a huge desire for businessmen here and entrepreneurs here to invest overseas. So, I think us being being here, I find I'm talking a lot to people about who are wanting to buy property in the UK and invest in property in the UK, and it's great to be able to advise them on the best route to do that.
Being on the ground, although you're not looking for that business, being on the ground here just gives you a natural angle and access to people that aren't necessarily getting advice there.
Exactly, there'll always be a connection between South Africa and the UK, and so it's a great. It's a great, you know, that up and down, that plane trip up and down. You know, the time zone effect is minimal. It's actually great, and it's nice to get on a plane at, you know, 9, 10 o'clock at night here and have a sleep and wake up 7 o'clock in the morning in London. You know, you can be in the centre of London by 9:30. Have your first meeting at 10 a.m. You know, and off you go. So it's a great place to be, for sure. And
looking forward to seeing you at the dinner here tomorrow night. We're going to be enjoying drinks on the lawns here and a wonderful dinner in the ballroom. I mean, intermediaries for your business, important connections and to support each other and drive forward.
Absolutely, David. Yeah, no, it's most of our referrals for a debt come via intermediaries. So these types of events are perfect for us to attend. So I mean, this is what it's all about, putting people together. So, really looking forward to it.
Brilliant. And what's in store for 2023? I mean, how are you going to? What's your plans to continue growing your business and developing what you're doing?
Yeah, I think we're going to open an office here in Cape Town to have a bit of a more permanent presence down here. Yeah, and then obviously we want to in the next 2-3 years we want to have a presence in Dubai and in Monaco also. So I mean, we know those markets very well. We travel to those markets a lot. So to have a permanent presence, I think in those 4 places. London, Monaco, Dubai, Cape Town. I think that's the goal. Yeah.
I mean, what do you see out of UAE and SA? I mean, there's strong links and connections there, isn't it? It's a very dynamic market.
It's just the interest in investing in London. It's just London puts it all together. I really do believe London is a centre of the universe, and it's a great place to be. I'm very fortunate to be able to have a business in London. So. So I think it's just London glues it all together for sure.
Brilliant. Well, look, Jimmy, terrific to talk to you, and we'll see you tomorrow night.
Thanks, David. Nice to see you.
The latest technical content delivered through global conversations with professionals for professionals.